Ideally, we all want to invest in a stock that appreciates or goes up in price. Now, finding that stock is the first step, but equally important is buying the appropriate number of shares of that stock. I'm Scott Connor, a 30-year veteran trader, and today you'll be learning about position sizing right here on Virtual Trade. Welcome to Virtual Trade. In this episode, we'll dissect the basics of position sizing, or the size of your position, within a portfolio. Next, we'll charge into portfolio management on the Thinkorswim platform. And finally, new trader Jenny Horne joins us to identify sectors that specific stocks belong to. Position sizing is probably one of the most overlooked elements of risk management, but it's among the most important. Position sizing is designed to help an investor determine how many shares of stock to buy based on the overall value of the portfolio, the risk investor's tolerance, and other factors. Now, ignoring position sizing can be detrimental because concentrating too much of a portfolio on a single stock can be extremely risky. Why? Because individual stocks can potentially make volatile moves to the downside. Everybody's heard the phrase, "don't put all your eggs in one basket." So how does this relate to a stock portfolio? Well, think about the basket being your stock portfolio and your eggs being your stocks. Once we have a diversified basket of stocks or eggs, we want to make sure that the size or value of those eggs is similar. One large egg could expose our portfolio to excessive downside risk. Now, let's take a closer look at position sizing.
The goal of position sizing is to find an acceptable risk level in a single stock. Determining position sizing can help you answer one of the most fundamental questions in investing, which is, how many shares of a stock should you buy? To answer this, investors need to first figure out the maximum risk that is acceptable in an individual stock. Most investors may consider an acceptable maximum risk to be 1% of their portfolio in an individual stock. That said, conservative investors might use as little as 0.5%, while more aggressive investors are willing to accept as much as 2% risk per stock. Let's run through an example of how to calculate a position size. Suppose there's an investor interested in buying stock XYZ. First, the investor needs to determine how much of her portfolio she's comfortable investing in this particular stock. Let's suppose she's okay risking 1% of a $100,000 portfolio, or $1,000. This is the maximum amount of risk she finds acceptable in an individual stock. Now that our investor has the maximum risk calculated, she can determine the position size, or how many shares to buy. To determine this, she must consider the stock's price. Suppose stock XYZ is trading at $30 per share. She will then determine the stop loss and how the difference between the purchase price and stop loss relates to the maximum risk of $1,000. Let's break this down step by step. Suppose that the $30 stock has strong support at $28.25. So our investor decides to place a stop loss just below at $28. The difference between the purchase price and the stop loss is $2. This is the risk per share. So now the investor needs to figure out how many shares to buy. To determine this, she divides the maximum risk per position of $1,000 by the risk per share, which is $2. The result is 500, which is the number of shares that she'll buy in this example.
So to recap, the goal of position sizing is to help manage risk. A conservative investor typically spreads risk out over a diversified portfolio with an array of smaller positions, whereas an aggressive investor might concentrate risk in just a few large positions. Now, let's take a look at a few final aspects of position sizing.
The point of position sizing is to keep losses small in relation to the larger portfolio. The benefit is that it's much easier to recover from several small losses than a single major one. Let's consider an example of a series of small losses to illustrate this point. Suppose that our investor invested the entire $100,000 portfolio in 6 stocks that are all trading around $30 per share. Using the position sizing formula, she buys 500 shares and uses a $2 stop loss in each stock. If all 6 stocks stop out for a loss, the worst case scenario is a loss of $6,000, or 6% of the total portfolio. This is a small loss of the total portfolio and relatively easy to recover from. But let's consider a very dangerous alternative. Suppose she invested the entire portfolio, all $100,000 in a single stock, and then disaster strikes. The stock suddenly drops 20% after the company reports dismal earnings. The loss in the portfolio is a gut-wrenching $20,000. These types of sudden and very big losses happen in individual stocks more frequently than you might think. And using a stop loss won't always protect you because a stock can gap or jump below a stop loss. There are many ways to help protect against large losses in individual stocks. Among them, diversifying among different types of individual stocks, and the second is position sizing.
As we wrap up, it's important to remember the point of position sizing is to keep losses small in relation to your overall portfolio. Exiting trades with a greater number of smaller losses is preferable to taking larger losses on fewer stocks. And finally, there are 2 principal ways to protect your portfolio: diversifying among different types of individual stocks and position sizing. Welcome back. It's time for Tools of the Trade. Every episode, we look at various tools within TD Ameritrade, Thinkorswim, and Mobile Trader. Today's tool, the Monitor tab, and Account Statement and Trade tabs on the Thinkorswim trading platform. Well, the easiest way to get started is let's just jump right into the Thinkorswim trading software and take a look about what we're going to be looking at today. Now, we've been talking a lot about our portfolios and position sizing, so that's what we're going to focus on here today. Now, how do we first look at our portfolio? Well, let's go through that step together. I'm going to jump right into the Monitor tab, and let me hide the left sidebar in the meantime just to make it just a little bit bigger. So how I did that by clicking on the left side. Now within the Monitor tab, you might say, well, let's look at positions, but you don't see anything. Make sure we hit the drop down, and that will open up whatever positions you have in each subgroup. Now we're seeing a quick look at Jenny's entire stock portfolio. As you can see, there's 20 different names in here. On the right, I can scroll down to see all of those different names. Now, since we're focusing on position sizing, one of the things that we're going to talk about is making sure that when we build our portfolio and we're looking at it in the Monitor tab, have we equally distributed the same dollar amount into all the different stocks in a portfolio? As you recall, we started with a $100,000 paper money account. We decided to use $80,000 of that to build the stock portfolio and keep $20,000 available for other potential trades. But how do we determine how much money we spend on each stock? Well, it was quite easy. $80,000 divided by 20 stocks is about $4,000 for each stock. All right, now the next question is, how can I see that, Scott, on the portfolio itself? Well, follow along with me. There's not really a column here that's showing this. We can see the ticker of each symbol, the quantity of shares, what price we traded at, but we want to know what the value of each is so we can go ahead and verify that we've equally distributed that value. So we're going to add a new column. Follow along with me. I'm going to go to the little icon, the gear icon, and what we're looking for is what's called the net liquidating value, or net liq, as you can see. That's one of our column choices here on the left side. So I'm going to highlight that and click Add. Now that will add it to our column set in our portfolio. Make sure you hit OK, and there we go. So now we can see that we have the net liq column, which just added to our stock portfolio. Now you can see as we're going through him, disregard AXP, that's our example, but if we take a look at the stock positions we really have, look at each one is right around $4,000, maybe a little bit below, a little bit above, but we just wanted to approximate that value. Now as time goes on and the markets and stock prices change, you'll see that net liquidating value change as well. If a stock does very well, its net liquidating value will go up. If a stock actually declines in value, we'll see that net liq go down. Now, something we'll talk about a little bit later is adjustments that we could potentially make to a portfolio to ensure that we keep those numbers fairly well distributed. So now we have a way to determine quickly, and I'll scroll down to the bottom so you can see each and every stock, and you can see we're pretty close to that $4,000 level. Some have actually gone up since we purchased them, some have gone down a tad, but you'll see a small variance in those numbers. All right, well, let's do this. Let's start from the top then and pretend as though we're adding a new stock. And we'll use the symbol AXP. As you can see, we have no position in that, but we'll use that as an example of how we would go ahead and determine how many shares we'd buy if we were to add another stock that met the requirement of about $4,000 worth of value. So how do we do that? Well, I'm going to go to the left sidebar and take advantage of something we already have in the software, and that's the calculator. I can do that by clicking on the drop-down, switching the gadget, and going right to calculator. Now, let's go through the process of how we would calculate AXP, or how many shares to buy. Let's go to the trade tab first. We'll put in AXP, the symbol AXP, enter, and we can see that the stock is currently trading about $100 a share. All right, so we're going to use that information to determine how many shares of this $100 stock we would need to buy to get us close to 4,000. So an easy way is, let's go to the left sidebar again in the calculator. Let's put in 4,000 divided by $100 and equals, there it is, 40 shares. So very simple in this case. We have a $100 stock, 4,000 divided by 100, that's pretty simple. It gives us 40 shares. So now we know how many shares we want to buy. Let's hide the left sidebar and go through the process of adding 40 shares to our portfolio. We're in the trade page again, a trade tab, excuse me, and of course, let's go through the process. To buy a stock, I simply move my mouse over the ask price, and with one left click, it will give me the order or set it up for me. Now let's go ahead and click one time on AXP, and you can see down below it says to buy, correct. It says 50 shares. Now 50 shares is our default setting. Don't forget, you can change your default to whatever you'd like, 25 or 100 shares. We set ours to 50. And that way, each time we click on the up and down bar, we set our change increment to 25. As you'll notice, if I click up one time here, it jumps from 50 to 75. If I click on the down button, it takes it back down to 50. So you can set this up in your application settings to whatever you want your default quantities and change prices to be. All right, well, let's keep going. We have our 50 shares of AXP. We're looking at the current price. We know it's about $100, about $100.50 per share. We have a limit order, and it's a day order. Now, we need to do a couple changes on this to meet our criteria. For example, if we wanted to buy the stock at perhaps a slightly lower price, let's just put it in at $100 even. Let's say if the stock were to drop a little bit and we were interested in buying 40 shares at $100 a share, let's change that price. It's still a limit order because that's the price we want to buy it at or better. So a limit order means buying at that price or better. And now what about this? We're on a day order. Now remember, day order means if it's not filled by the closing bell, it cancels your order. We'd like to leave this in a little bit longer because what if it doesn't get down to 100 until next week or maybe 2 weeks? Well, we need to change this from day until good till cancel. That simply means that the order will remain in till either it gets filled at our price or I cancel it. Now that order will stay in up to 6 months. All right, so let's go ahead and confirm and send and take a look at the order itself. Let's review our order. We're buying 50 shares of American Express at $100 a share. Now this order will also tell us in dollar terms how much we'd be spending on this or what the value of the stock is. Let's take a look at that number right there, 5,000. That's the cost of our trade. Now this is pretty simple math. We're using 50 times $100 a share, and that gives us 5,000, of course, plus our commissions. Now that's a simple way to go ahead and add a particular stock to another portfolio. We wanted to go through the process so you could see it live in the marketplace. We're not necessarily adding this one to our portfolio right away, but we went through the process, the same thing you would do to add a stock to your portfolio. All right, well, let's go ahead and back and take a look at how to switch our gadget back. Just click down here, drop to switch gadget, and then perhaps go back to a watch list. In this case, our watch list is keeping an eye on Jenny's portfolio. So there you have it, an easy way to go ahead and calculate the number of shares and get the correct position sizing. That wraps it up for us. Don't forget, for more information on these tools and other great education, visit the Education Center on tdameritrade.com. Welcome back to Virtual Trade. I'm joined by new trader Jenny Horne. Jenny, welcome back to the show.
It's a pleasure to be back again, Scott.
Great to have you. Now, Jenny, let's start off by identifying sectors that specific stocks belong to. As you recall, when we first built our portfolio, we talked about the importance of diversifying stocks in different sectors within that portfolio.
Right. I remember we built our first 8 of the watch list. We used the sectors to kind of pick 8. So I think I'm a bit familiar with this.
So as we dive deeper into sectors, you'll see that there are actually a few more sectors than we covered. So let's learn a little bit about the sectors, what they are, and then we'll check our representation against all the different sectors that exist. Sound like a plan?
Sounds like a plan.
All right, let's do it. So how do we find out what these S&P 500 sectors are? Well, follow along with me, Jenny. What I'm going to do is go to the Market Watch tab, and you can see that we still have our list of stocks in there. Those are the original 8 plus the 12 that we purchased throughout the different sectors. But what I'd like to do is I'm going to change this from Jenny's watch list and drop down to a public list where it says S&P 500 sectors right here. Now, when I do that, you can go ahead and see the different sectors listed out here. And I believe there's 11 sectors. And you can see really quickly financials, industrials, consumer staples, materials, energy, et cetera, all the way down to IT.
This also seems like a great way to see what sectors are up and down for the day. Like I can see right now who's up, who's down based on green and red, and that's kind of nice to see.
Absolutely. And here's what's also important about that. We can see or arrange by clicking on the column header what the net change is, and it puts them in order for us so we can see what the biggest net change is from top to bottom. So on this particular day, information technology is one of the leading sectors in the market, and of course the financials are actually performing the poorest today.
Okay, so kind of the winners and losers. This is a great way to identify them.
Right, and if we want to just kind of get an idea of our portfolio, once we learn the sectors that we've covered, which is most of them, of course, we can kind of take a glance here and see overall how the market's doing.
Right, that's awesome.
Now, one other thing you might want to do, Jenny, is here it's just giving us a number. Well, you can see that the last price of many of these sectors are different, or quite a bit different in value. So what I'm going to do is add this, go to Customize. I'm going to add percentage change from the available column into our current set. So I click on Add, and then let's take that percentage change. If I click on that, I can move that up so it's right after, actually right after the net change. All right, I'll hit OK. And then we should be able to see that. I might have to widen it out just a little bit here. There we go. Give me a second and I'll widen this out. Now, Jenny, we can see the percentage change. Right? Instead of just the number, we can actually see which ones are moving up or down percentage. It's a better way to sort of make a comparison.
Right, because the prices are all over the board, but this is kind of an even way to just visualize.
Right.
Yeah.
Well, perfect. You can see right now telecom is leading in a percentage basis, and then of course financials same way on the downside. So you get a quick idea what those are, including real estate, which was recently added to this list. Okay, now let's do this. Now that we're familiar with the sectors, let's go into our own portfolio, maybe start with the Dow and then go into our portfolio and see how we can see the sectors of these different stocks. Before we go into those wide ones, let's just talk a little bit about individual stocks. How can I find out what sector an individual stock is? Well, do you remember?
I think I remember. I think we went to the Analyze tab.
Exactly.
And we were under Fundamentals, which were already here. And under their company name there it is, Information Technology.
Perfect. So that's a great way to see, just quickly, type in any stock in the symbol box, and then you'll see that same number pop up. Let's put in a blue chip, IBM, you can see Information Technology. So an easy way to do that for an individual. Now, let's jump to something that we also kind of touched on once before, but this is a great tool within the Market Watch tab. I'm going to jump over to Market Watch and go to Visualize now. So our sub-tab is going to be Visualize.
I remember this, the heat map.
And you can see right now we have quite a few. I'm going to go to Indices, and let's just start off with one that everybody's familiar with, the Dow Jones Industrial Average. And of course we have about 30 stocks in the Dow Jones Industrial Average. Now, what else do you notice about the white boxes on each grouping, if you will?
They are the sectors. These white, the healthcare, industrials, financials, it groups them for you.
Absolutely, and you can see that pretty much the Dow Jones is a diversified portfolio. You can see they have distributions of stocks in all the different sectors here. Energy, financials, consumer staples, et cetera, et cetera. So let's do this. Let's take a quick look at Jenny's portfolio and do the same thing. We'll just switch it here up on the heat map. I'm sorry, wait, not the heat map. We want to go to our watch lists, go down to personal. Click on personal and get that to open up. Give me just a second. There we go. And Jenny's first watch list. All right, Jenny, what do you see?
Well, I see that information technology takes up a huge chunk of my portfolio.
I can see that. And you're not alone. The Dow Jones is pretty much the same way. How about the rest of the indices? Or I'm sorry, sectors.
Energy's big, healthcare's big, Johnson & Johnson is so big. but I'm not sure if we have all 11, because it doesn't seem like there's that many.
Right. As a matter of fact, I'm looking across our different groups, and we know there's 11. 1, 2, 3, 4, 5, 6, 7, 8. And actually, I think Hershey's is a part of consumer staple. So we have 9 of them. Now, it's not, you don't always have to have all 11, but we could certainly add and diversify further with one more stock if you'd like, because you're absolutely right. I don't see materials here.
Absolutely, and I think we have some cash left over.
Yes, we do. All right, well, let's go back to the trade page and add a stock that falls into the materials group, and that stock would be Dow DuPont, and the symbol would be DWDP.
There it is.
Okay. And it's about a $68 stock. So let's go ahead and click on the ask price like we've done before.
Great.
And if we bought, how about 75 shares? Let's try that.
And I remember this tool just goes up by 25, which is awesome.
And click on confirm and send. And that's giving us about how much?
About 5.
About 5,000. So it's a little bit high. Let's lower this down to, just hit edit now.
Oh, edit. Okay.
Edit, and that takes you back, and now you can change anything. Let's go down to 50 shares maybe, and we'll just keep it at round numbers and 50 shares. Perfect. All right, so now we're looking at that, and that's about 3,400. Perfect. So let's go ahead and execute that one and stay within the lines of what we were sort of allocating to each stock. That was around $4,000 per stock. Okay, so now if we go back to the Market Watch tab, and let's see if we can see it in there. Consumer, let's see, we've got Hershey down here. It might not be in yet, but we should now have a new materials, a materials sector added as well. Let's make sure it's gone into here. If we go to monitor page, of course, we can always look at our positions, and then we can see DWDP. Is that in? Yep, it's in there. Okay, perfect.
Great.
All right, so now we've covered most of those different sectors within our portfolio and diversified just a touch more.
Right, now I think we've covered pretty much all the bases.
All right, remember we did talk about the position sizing, and important about that is when we diversified, as you noticed, we kept that same amount of money putting into that stock as we had our other stocks.
Right, so they're all kind of even.
Makes sense, all right. Now, let's take a quick look at how much cash that we actually have in each stock. And I'm going to stay right here on the monitor tab looking at our positions, and you can see the trade price, the mark, et cetera, et cetera. Now, how do we know how much we have spent on each of these stocks? I'm going to hide the left side bar. Let's make sure we have something in here. I'm going to customize our column setting and go to one called net liquidating value. Net liquidating value. What that basically does, it tells you the current value of your stock. So if you liquidate it at the current price for the number of shares, that's how much you'd have.
Okay.
So let's add that one in. Hit OK. And we have net liquidating value. Let's see if that is in here. There it is, net liquidating value. So if we take a look at the net liquidating value of all of our stocks, you can see it's right around 90,000.
So we have about 10,000 left.
Exactly right. Yeah. Jenny, we started off with 100,000. We said we want to diversify. We had 20 stocks. We're up to 21 now. We still have 10,000 obviously left in our paper money account. So this gives us a quick way to identify where we are with our stocks. And Jenny, if we wanted to come back and say, well, listen, which of the stocks has a value higher than or lower than the others, we can always rebalance that by buying and selling some shares within the individual stocks. Does that make sense?
Totally, and this is actually a really great way to see we pretty much have around the same amount, give or take, for each stock.
All right, so Jenny, we covered a lot. We covered the sectors, diversification, how to see what your net liquidating value is, and how to see all the sectors within your portfolio. What do you think?
I think this is great because people talk about the S&P sectors all the time, and this is a really good way to say, okay, this stock belongs here and this stock belongs there.
Oh, I'm glad you feel much better about knowing the stock and the sectors that you're in.
I definitely do.
All right, well, thanks, Jenny. Thanks for joining us, and we will definitely see you next time.
Thanks, Scott.
All right. In this episode, we explored why is it important to position size appropriately and how not doing so can place your portfolio at risk. We also determined how to calculate an appropriate number of shares and set up a buy order on the Thinkorswim platform. Finally, Jenny and I determined how to easily find which sectors our various stocks fall into. I'm Scott Connor, and thanks for watching Virtual Trade.